Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. We're about to get started. Thank you so much for taking the time to join. If you did bring some questions or comments or topics you want to discuss, please start to chat that up as we want to use this time to answer the questions or review the topics that you want to discuss. So with that in mind, let's get started with some foundational content here. 1 second. We want to do some housekeeping first of all. Now, today we want to talk about how someone could open up a 401k without an employer. So we want to go through that discussion, but we definitely also want to use the time to answer questions or topics that you have. So the presentation is going to be provided for educational purposes only, should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's also talk about our YouTube channel. So we have a YouTube channel where we host webinars twice per day. So if you subscribe to our YouTube channel, you'll get notifications. So we have these office hour style webinars on the YouTube channel twice per day. There's one at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back in the afternoon at this time, at this slot, 1 p.m. Pacific, 4 p.m. Eastern. So it's an office hour styles format in terms of we're here to answer questions or go over topics that you might have. But we also come with a lot of prepared content. Like today, we're going to talk about how to open a 401k without an employer. Earlier today, we were talking about mega backdoor Roth solo 401k. That's one of the top reasons customers sign up with us. We regularly have, at least once a week, deep dive sessions where we have a lot of great prepared content. So it's all for free. There's no charge. You don't have to be a customer. So if you could be a prospective customer, you could be an existing customer, could be an advisor, or just someone who's curious about how it works. So we just welcome the opportunity to discuss these topics. And so last Friday, for example, our deep dive session was the 2024 and 2025 Solo 401k contribution guide. Now, last week's session was focused on businesses that are taxed as an S Corp or a C Corp. Could be an LLC taxed as an S Corp or a C Corp. This Friday, we'll be back with another deep dive session because it is contribution season. But this Friday, we're going to be focused on businesses that are taxed as sole proprietors. Could be a sole proprietorship, could be a single member LLC that's a disregarded entity. So where the income is reported on Schedule C of the 1040. So we're here to go over all things A to Z when it comes to contributions. That'll be on Friday. So if you subscribe, you get the notifications. You can come back and watch the recording later. And so it's just a great way to get involved. Another way to access the content is on the webinar page. So if you go to mysolo401k.net/webinar, you can also find the schedule there. And there you can enter your email. And that way, if you can't make a live session, you'll get an email later with a recording. So it's another great way to get involved. Lastly, we want to highlight the forums. So we have a community of over 30,000 members. We've got active forums on there where people are posting questions all throughout the day. So it's a great way to come and ask a question or see what other people are asking about. We've got a library of videos and webinars. You can see all the questions we've had just in the past 24 hours, for example. So it's a great way to hear what other people are asking, ask your own. It's a great way to learn, share the knowledge in simple terms. And then, of course, we have a library of videos and webinars. So we're all about education. Now, with that stated, let's go to the content, really answering that question about how to open a 401k without an employer. So a lot of people, they learn about 401k plans through a job, right? You might have a corporate job where that's one of the benefits. So, and that's great. It's a great tool for a lot of people to save for retirement. So when you're self-employed, though, right? Or if you don't have a job that offers a 401k, the question becomes, okay, well, how can I set up a 401k? Well, if you're self-employed, you will have access to a 401k. You'll have access to a solo 401k if you're self-employed with no non-owner, non-spouse employees. In other words, no employees working for you. Then you can set up a solo 401k. And as a matter of fact, a solo 401k is going to be much more powerful than a 401k that you would have through a day job. Much more powerful in terms of higher contribution limits. You could do Roth, mega backdoor Roth. You could take a 401k loan. You could invest in alternative investments. So some of those things might not be available, or might be available through a corporate 401k that you have through a day job, but they're not all going to be available, right? You're not going to be able to invest in crypto. You're not going to be able to do a mega backdoor Roth. You're not going to qualify for the tax credit, right? So we have the full feature plan that comes with all the features, all the support, comes with the tax credit, comes with the ability to do the mega backdoor Roth, take a loan, invest in alternative investments. So you can have a 401k if you don't have an employer, as long as you're self-employed. And then you technically don't need to have an entity for your self-employed business. Let's go to this solo 401k eligibility pages to just help emphasize it. So we've got many customers, for example, who operate as sole proprietors, and that doesn't mean they're not eligible as long as they're reporting earned self-employment income and they don't have any full-time W-2 employees working for them, right? So they could be an independent contractor, right? They could be a solo practicing attorney. They could be a realtor, right? The sky's the limit, right? As long as they're reporting earned self-employment income with no full-time W-2 employees working for any business owned by that person or a spouse, if any, they'll be eligible. And now they have the ability to access this fully featured plan, right? Where you have much higher contribution limits, the ability to invest in what you want, right? You get access to emergency funds via a solo 401k loan. You can take a tax credit. So the cost is zero for the first 7 years because our plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits, which is going to more than cover our fees for the first 7 years. So let's dig a little deeper. So again, got to be self-employed, no employees. Now your spouse can participate in the plan as long as your spouse is working in the business. Some of the top eligibility considerations: do I need a separate entity? No, you don't. You need to report earned self-employment income, but that can be reported on Schedule C. For example, if you operate as a sole proprietor. Now, if you do have an entity for your business, that's fine too, as long as you're reporting that earned self-employment income. There's different ways to satisfy that earned self-employment income requirement. It could be on Schedule C. It could be W-2 wages from your self-employed business. Like say you have an S Corp and you receive W-2 wages. If you have a partnership, it could be income reported on line 14 of the K-1 that you get from the partnership. There's no minimum amount of earned self-employment income. So it's not that this is just available to bigger self-employed businesses. It could be a micro business. As long as it's legitimate, as long as you're reporting that earned self-employment income, as long as there's no full-time W-2 employees working for you, then that business would be eligible. Again, your spouse or business partner can participate as long as they are reporting their own earned self-employment income. In that case, it's just going to be one plan. So it's just one fee from our perspective, different accounts for each person, but one plan, one fee. We help as part of the onboarding process to open up accounts at the bank or brokerage of choice. We're neutral as far as where the accounts are opened up. We've helped customers open up accounts at hundreds of different banks, many different brokerages, like Fidelity, like Schwab, like a credit union, etc. Now, if you do have a day job, even if you participate in your day job 401k plan, if you have that separate side self-employment activity with no employees working for you, you're still eligible. You can still contribute. You can still roll over money from a former employer plan or a non-Roth IRA. So the fact that you have a day job and even participate in your day job's 401k plan is not going to preclude someone from setting up a solo 401k for their separate side self-employment activity. So yes, it's possible to set up a 401k if you don't even have an employer, if you got that self-employment activity, and you don't need an EIN number. So that was another eligibility FAQ there. You don't need an EIN number for your business, right? You might be operating through your social security number, and that's fine. Again, the key is that you report that earned self-employment income. Okay, wonderful. So now let's go through a question here. What's the process to open a 401k through you for after-tax investments and do this with Fidelity as the brokerage? Well, that's a great question. So that really goes to one of the top use cases. That brings up a number of good points, which is wonderful. Thank you for bringing it. So if you look at some of the top customer profiles, one of the top customer profiles is the Roth Maximizer. So this is the individual that wants to maximize the amount of money going into a Roth account. So with our solo 401k plan, our plan allows for mega backdoor Roth contributions. And there's still time to set up a solo 401k for 2024 and make mega backdoor Roth contributions for 2024. Of course, there's time to do it for 2025. For 2025, those contribution limit are even higher than the limits listed here. This is the 2024 limits. For 2025, they went up to 70,000 or 77,500 if you're 50 or older, or $81,250 if you're age 60 to 63. So you can see you could really get a materially different, a much higher amount of funds in your Roth account versus say like an IRA with the mega backdoor Roth solo 401k. Now, the way that you make mega backdoor Roth solo 401k contributions, to your question, is after-tax contributions. So you have to have a plan like ours that, number one, allows for voluntary after-tax contributions, and then number two, allows for those in-plan conversions. So it's really a two-step process. First, the funds go into an after-tax account, and then they get moved over to a Roth account. So the reason they have to go to that after-tax account is the after-tax solo 401k contribution limit is much higher than the employee limit, right? With the employee limit, for example, for 2024 is $23,000. For 2025, it went up to $23,500. Still a good amount, but if you want to go to those high amounts that I mentioned up above, you have to do that as a voluntary after-tax contribution. So that voluntary after-tax contribution limit is 100% of the self-employment compensation, dollar for dollar, up to the overall limit. So you can go up to $70,000 for 2025. Now it has to be deposited into a separate voluntary after-tax account because of the compliance rules, some of the technical rules. And we help our customers open up the requisite number of accounts. So a separate, say, after-tax account at Fidelity. Then the money needs to be moved over. So you have to have a plan that allows for that in-plan conversion, which our plan does. You then move the money from the after-tax account to the Roth account. So now you got a second brokerage account, for example, at Fidelity for Roth funds. Reason why is now that money's in a Roth account. So any gains are going to be tax deferred and even tax free if when you withdraw the money from the Roth solo 401k, you do it as a qualified Roth distribution, meaning you've had the account for at least 5 years and you're 59 and a half years of age. So it allows for that potential for tax-free growth. Now, Fidelity, to the second part of your good question here, we are neutral as far as where the accounts are opened up at. We've helped customers open up accounts at hundreds of different banks, many different brokerages. So the top brokerage option is Fidelity. Why is that? Well, Fidelity, they recently migrated to an online process. It's much more streamlined. It's much faster to open up the accounts. Number two, you got more options to make contributions. For example, they have payroll integrations with payroll providers like Gusto and ADP, etc. You can also deposit money electronically from an external account. And then of course, I mean, it's Fidelity. It's a well-known company. A lot of folks might already have accounts at Fidelity. It's a free account that's set up. They offer free online trading. Now, it would be at least 2 accounts of Fidelity, one for after tax, a second for Roth. And again, it's that 2-step process where you first deposit to the after tax before it gets moved to the Roth. Now, that first step, the after tax contribution, that's not reportable. It doesn't have to be reported on the personal return or the business return, right? So it's being made on an after tax basis. So it's not like a pre-tax contribution where you want to report it so you can get that income tax reduction credit. The second step, when you move the money from the after-tax account to the Roth, now that's reportable by the plan. It's not going to be taxable because it's after-tax money, but it's still reportable by the plan. We handle that required 1099-R. So it goes back to finding a provider like us that offers a plan that allows it and then also has the experience to help you through these specific steps and provides the compliance support like the 1099-R. So we check all the boxes. So we have an online form on our website that customers use to provide us the information that's needed to prepare the 1099-R. Customers just let us know, okay, I move money from the after-tax account to the Roth. Now we capture that information so we can prepare the 1099-R that's required to report that after-tax to Roth transfer. The after-tax deposit is based on self-employment income only, or it can be based on W-2 income from a job that doesn't offer a 401k option. It has to be based on self-employment income only. So for a business tax as an S Corp, that would be W-2 wages from the self-employed business tax as an S Corp. For a business tax as a sole proprietorship, you got to run a pre-calculation. We help customers every day with that pre-calculation. It's line 31 of Schedule C, so your net income, for example, after your self-employed business expenses, less 1/2 of the self-employment tax. The product of that calculation, line 31 less 1/2 of self-employment tax, that is self-employment compensation. The individual can contribute 100% of that amount, dollar for dollar, up to the overall limit, which, for example, for 2024 is $69,000. For 2025, it went up to $70,000. Keep in mind, it's not reduced by contributions made to a day job 401k plan. So again, you can have a 401k at your day job. You can make contributions to that day job 401k, and you can still hit the limit to the solo 401k as long as you got the self-employment income to justify those voluntary after-tax contributions. No, it still matters where it came from. You still need to have the income to justify the contribution, right? It's still considered to be an employee contribution. So the way that I think about it is that a 401k is for people who work. A solo 401k is for self-employed people. But the purpose of it is to save that earned self-employment income. So you can't save more than you earn. So if you don't have this earned self-employment income to justify the contribution, if the contribution is greater than the earned self-employment income, in other words, it wouldn't justify it. So you can contribute 100% of the earned self-employment income dollar for dollar up to the overall limit, but you can't contribute more than the earned self-employment income. Great question. Well, thank you so much for the good participation. As mentioned, please continue to participate. Come to the webinars, mysolo401k.net/webinars or /webinar. Come to our community, post questions in our community, just see what people are asking about. Subscribe to our YouTube channel so you can get all the notifications of all the content that we're constantly putting out there and the opportunity to engage. As always, we really appreciate the chance to discuss these topics. Thank you so much for taking the time to join. Please continue to engage. Please like and subscribe if you're on YouTube. All right, until next time, everyone, take care.